I was walking the course yesterday, seeing the AT&T signage everywhere, watching it get picked up on CBS, all the places where it's getting played.
Yeah.
And I just started thinking about the Super Bowl and how it's now $5 million for 30 seconds in the Super Bowl. I don't know how much this costs, but is this more or less than that? How do you kind of look at this and think, okay, this is what we're spending and this is why?
Well, we've never disclosed what we pay to sponsor this. I hope Jay Monahan is in bed because he's the guy that we negotiate these deals with. But I would tell you this is the best ROI of any advertising promotion that we do. And, we're interacting with some of the biggest customers in the B2B world, And it's a great event. It gets great carriage for both the consumer as well as businesses. It just crosses the boundaries of multiple demographics. So we just love this event for that reason.
And just in terms of the pure golf fan, there's only 4 majors, but I'd have trouble, the next 4, this would probably be one of my, and plus there's a major being played here later
Right.
this year. So the venue here is so amazing. And then you throw in Spyglass and Monterey. It's like, I think it's the best non-major event of the year, don't you think?
I really obviously agree with that. It's really a freakishly unique event because you're playing with the best athletes in the world, and amateurs are inside
That's the
ropes.
part. You're looking at me. You're right. If we're out there in the same ropes as.
But while they're playing with live ammo, you're in there inside the ropes playing the exact same game they're playing, and your shots matter. And it's really strange. Think of what other sport exists where amateurs get into the live play with the real athletes and get to see them up close and in person.
And everybody shows up for this too.
Yeah, it's a great event. It really is. Yeah.
Randall, I want to talk to you about the disappointment the Street had with the earnings last week. Stock was down, and I think it was because of the surprise in the decline in subscribers, both at DirecTV and DirecTV Now. There are people questioning on the street whether you can actually turn the TV business around there. What do you say to them?
The results were really right in line with what we had told the street back in November. And we had said we expect to see continued declines in the traditional video business. And what we are doing is now investing in a new streaming service. It's over in Warner Media. Mm-hmm. And, now that you own a large-scale media company, the idea that you can now build an SVOD, a subscription video-on-demand service that is premium, that is unique, it's leveraged off the HBO content, the Warner Brothers content, that is now where the investment is going for streaming television. An SVOD service. The traditional linear, we expect to continue to decline. We expected that when we bought DirecTV. We generated a lot of synergies with that acquisition. It was a typical synergy deal. You buy a declining business, you extract a lot of cost synergies, and people forget. Within 18 months, we had generated about a $3.5 billion run rate synergy in this business. Still generating $4 billion of cash flow. That $4 billion is now being invested in the new platforms. So it's being invested in fiber deployment, and the fiber deployment is going great. In fact, our broadband business in the quarter was up 6-7%. We're investing in an advertising business. And by the way, since we bought DirecTV, we have stood this advertising business up. It's a very unique business. It's a $2 billion a year business now, and it grew 26% last quarter. So we're investing in that and investing in the SVOD. So what you're seeing is investment in the traditional linear goes down. You'll see subscribers continue to go down. As we stand up the SVOD service, you're going to see significant growth over here. That's where our excitement is, and this is where we're putting all of our focus and our investment.
Would everything else have been possible if you didn't do DirecTV? Do you think it gave you a footprint, didn't it, to do this?
It would have been really hard to execute this strategy had you not done DirecTV, because you needed some basis to get content delivered to mobile, the world of mobile. That's what we were always trying to accomplish, and we've been trying to do that for many, many years. We actually got that done. We got all the rights to begin distributing to mobile within months of closing DirecTV. And so now you do a media company, you own a media company, and you own some great IP, and you stand up a new SVOD service, video on demand service. Now you have just built-in distribution for this SVOD, not only through your traditional DirecTV subscribers, but through your mobile subscribers. And so the two work hand in hand. The next 2 or 3 years, bringing these two together, standing this up and distributing.